The share of people, basically in Europe and in the States, who say that they've got good affordable options for housing. We're that black line right there. 39% of the people say we've got good options. Now, I guarantee none of these live in California.
The share of people in OECD countries, that's the Organization for Economic Cooperation and Development countries, who say they're satisfied with the availability of good, affordable housing, fell to 45% in 2023 from 51% in 2019, according to the Gallup World Poll, an annual survey. Now, why this matters?
When you have to spend more money on housing, that means you spend less money on all other goods and services. When you spend less money on all other goods and services, employers start to lay off employees, and our entire economy suffers the brunt of high-priced housing. In short, if we really want out of this recession, we need affordable housing first. And it's not even going to be discussed on the debate tonight. Just watch how fast they gloss over it. Now, this is precisely why this last Friday, Federal Reserve Governor Christopher Waller down there in Texas, he said,
"The time has come for the U.S. Central Bank to begin a series of interest rate cuts this month," adding that he is open-minded about the size and pace of those reductions.
Adding, "If the data supports cuts at consecutive meetings, then I believe it will be appropriate to cut at consecutive meetings. If the data suggests the need for larger cuts, then I will support that as well." In short, my friends, we are going to see lower interest rates. Now, the time has come to call that database and start talking with them about refinances. This one's a layup that, of course, your company is talking to you about. It's not what I'm talking about at Cap Direct. The question really becomes, how many EPOs are you going to be responsible for? The answer? Well, none if you work for a new mortgage company, and that's not what I'm talking about either. So the question, do you think LOs strategically leave in quick-to-turn refinance markets as not to have their future commissions taken to pay off EPOs? What do you think?
Maybe one of the reasons the Fed is going to get aggressive with rate cuts is that credit card delinquencies are at a 12-year high. 12 years, not 12 months. The Philadelphia Fed report released Wednesday found that the number of accounts with balances at least 30 days past due fell in the first quarter, and the total card balances dipped somewhat as well. But remember, with respect to those credit card balances going down, as my husband would say, it's football season, or as I would say, it's time to get ready for the holidays. And that means putting some wear and tear on those credit cards.
And the Fed knows it, and they're trying to make rates lower for the holiday season because y'all are making your payments as it is. Well, it's not going to amount to a hill of beans. What is going to help is the second part of this story. I mean, that's from a loan officer's perspective, of course. Home listings are up more than 60% in most big cities.
Nationwide active listings in August were up 36% compared with the same month last year. And that's according to a new report from Realtor.com. And that's good news. The growth in supply is due to the fact that homes are sitting on the market longer. So not so good news. And while supply is increasing in most cities, some like Tampa and San Diego are seeing huge gains. Not good news, but hey, Tampa and San Diego, they get the Super Bowl like every other year, so we'll just have to deal with it.
Now, all this tells me the same thing. Sellers are not coming off their price. Huge talking point for loan officers, and that is kind of playing what I'm talking about just a little bit. And secondly, I wonder if houses are sitting as a result of buyers' agents and the lawsuit that has ensued. In part, sidelined a lot of those realtors, and as a result limited our pool of buyers. And now that probably hasn't happened yet, but wait till that narrative takes hold. And it will. And when it does, this whole seller paid buyer side commission conversation that we're having right now is going to take off. Just watch. I hope this helps. Hey, listen, guys, I don't want to spill the beans about this because, frankly, I don't want to get blown up. But, guys, we're just doing things different at Cap Direct. Loan officers, if you really want to change your business, hear me out on a couple of things that I have to say. And tell me, is anybody else in the country doing this? Yes, it's 100% above board. And it's on no other mortgage company's radar. Seriously, if you want to make a move right now, maybe you should talk with us. Fill out the information down below and let's have a conversation.